Hey everyone, after a long time there's a new mainline IPO in the market. It is the IPO of Ather Energy that would open between 28th to 30th April. Ather is one of leading player in Indian two-wheeler EV segment. So in today's video, we'll understand Ather Energy business model, IPO details, future growth and key risk. Based on both pros and cons, we'll conclude if it is worth applying for the IPO or not. Alright, let's get started. So Ather Energy is one of leading player in Indian electric two-wheeler market. But interestingly, Ather business is not just about selling electric scooter. It's a mix of EV, tech and services. Ather's electric two-wheeler portfolio comprises two product lines. Ather 450 in performance segment and Ather Rista in convenience or popularity known as commute segment with 7 variants across both segments. Ather is among top 5 EV two-wheeler player and is the only brand that has two distinct scooter offering catering to different segments. Rista, launched in April 24, has emerged as Ather's best-selling scooter and has unlocked more demand for them across market. As per Vahan data, Ather has been #1 brand in South India from December 24 to March 25. Now, like any OEM, vehicle sales make up the majority of their revenue right now. But here is the catch. Just selling EV is not the only way you make margins, especially when you are scaling. And that's why Ather is building a whole ecosystem around the product. For instance, when you buy their two-wheeler, they offer software pro pack that unlock a host of smart service on your scooter that include Google Map, vehicle diagnostic, ride stats, OTA update, WhatsApp, and host of convenience feature like Magic Twist and Auto Hold, which are quite unique in the industry. The software pack that Ather calls as Pro Pack is a unique offering in the EV two-wheeler segment that other players do not have. Then Ather Energy operates over 2,600 fast charging stations known as Ather Grid across more than 314 cities in India, Nepal and Sri Lanka, making it largest two-wheeler EV charging network in the country. Ather also offers paid service, spare part and accessories like helmet, charger, storage add-on. And this part of the business actually has better margin than the vehicle. At the moment, its EV scooter contributes around 90% in revenue and remaining comes from sale of service and accessories including 6% from software sale. Now, one of the most important aspects in EV vehicle is the battery. And the key question is, does Ather manufacture its own battery or does it import them? So Ather Energy design and assemble its electric scooter batteries in-house. However, Ather Energy does not manufacture the lithium-ion cells themselves. Instead, they source these cells from external supplier. However, they manufacture their battery packs in-house using lithium-ion cells produced from supplier. Currently, Ather operates two manufacturing plants in Tamil Nadu with a combined capacity to produce 4.2 lakh scooters annually. A third facility is planned in Maharashtra, for which company is raising capital in the IPO. If you look at company's promoter profile, company was established by IIT Madras alumni Tarun Mehta and Swapnil Jain, who serves as CEO and CTO respectively. Now let us look at the IPO detail. So Ather Energy IPO date is between 28th to 30th April. IPO price is set between 304 to 321 rupee per share. Company is raising 2,980 crore from the market. Out of this, company is issuing new shares worth 2,626 crore. Meaning they are raising this money for expansion and development. Remaining 354 crore is offered for sale where promoters and investors are selling their stake. So the good thing is, there's a small share offloading. Around 88% of proceeds are fresh capital, not promoter exit. From this 2,626 crore company is raising, 927 crore will go into setting up new manufacturing plant in Maharashtra. Then 750 crore is invested in R&D for new product development and tech innovation. 300 crore will go into expanding their brand presence and customer acquisition, and around 40 crore will be used to reduce existing borrowing. Interestingly, Ather Energy's biggest promoter, Hero MotoCorp, that owns around 38% stake in the company, is not selling any stake. So that shows the confidence of Hero Moto in Ather Energy. Out of 354 crore of offers for sale, the major selling is from corporate investors that invested during early stages. Company would be listing on Indian market on 6th of May. At an upper price band, company would command a market cap of around 12,500 crore. Now let us understand the future growth plan of the company. As far as growth is concerned, 21st century is all about electric vehicle and Indian two-wheeler EV sector is witnessing a good adoption due to multiple factors including government incentives, expansion of charging infra and declining battery cost. As urbanization increases and fuel price rise, EV offers significant cost saving. This high fuel cost is one key factor behind two-wheeler EV adoption in India. Today, many people are opting for electric vehicle, especially if they have longer travel on a daily basis. Additionally, the entry of multiple OEMs, competitive pricing and innovative financing options make EV more accessible, driving widespread adoption. Ather Energy has been at the forefront of riding this EV wave and is implementing various strategies to continue its growth journey. Its first strategy is product diversification. Ather Energy is diversifying its product lineup to cater to a broader customer base. In 2024, company launched the Rista series targeting family scooter market. Second strategy is manufacturing expansion. To support the growing production need, Ather Energy is establishing a new manufacturing facility in Maharashtra with an investment of around 2,000 crore split between phase 1 and phase 2. Phase 1 of the facility is expected to be operational in approximately 18 months. Then third strategy is global expansion. Ather Energy is actively pursuing international market to extend its reach beyond India. Company has already initiated its global expansion by entering Sri Lanka and Nepal. Ather plans to expand into additional international market over the next several years. Potential market include your Southeast Asia, Europe and Latin America. Then fourth strategy is charging infrastructure expansion. Ather Energy is expanding its charging infra to support the growing adoption of EV. Now let us look at the key risk for the company. So first key risk is financial losses and profitability uncertainty. Ather has reported consistent operating losses and negative cash flow since inception. Although the losses have narrowed down in the last few years, but it is still not profitable. Second risk is supply chain challenges. Company relies on external suppliers for components, including lithium-ion cells. Disruption in supply chain or fluctuation in raw material prices could adversely impact the operation. However, Ather has diversified its supplier base significantly over the last few years. Third risk is geographic concentration. Around 61% of Ather sales are concentrated in South India. This geographic concentration exposes company to risks such as economic disruption, political or social unrest, or changes in state-specific policy. With launch of Ather Rista, Ather is now expanding into other non-South region as well. Then fourth risk is intense competition. Ather faces competition from established players like Ola Electric, TVS Motor and Bajaj Auto. The presence of larger competitors with greater resources could impact Ather's market share and growth prospect. Now let us conclude by looking at both pros and cons of Ather Energy IPO. As far as valuation is concerned, since Ather is still loss-making, we don't have PE ratio. So if you believe in India's long-term EV growth and have the appetite to digest high volatility, then only consider applying for the IPO. This IPO is not for conservative or short-term investors. It's a pure long-term story. I also looked at the company's anchor book that was published yesterday, and institutional investors have shown good interest. Anchor investors include marquee names like SBI Mutual Fund, Franklin Templeton Global, Aditya Birla Sun Life Mutual Fund, Abu Dhabi Investment Authority, ICICI Prudential Mutual Fund, Invesco Mutual Fund, Morgan Stanley Investment Management, Aditya Birla Sun Life, Samir Arora backed Helios Mutual Fund, ITI Mutual Fund, Union Mutual Fund, Tata Investment, etc. As far as brokerage houses are concerned, Arihant Capital, Bajaj Capital, Ventura Securities have given recommendation to subscribe for this IPO, while few others like ICICI Direct, IDBI Capital, Nuvama Wealth Management has not given any opinion. So this is it for this video. I hope this information will help you take an informed investment decision. I'll see you next video. Till then, take care.